everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today, my guest is Miguel Perez-Santalla. He's the Vice President of Marketing for Heraeus Precious Metals Management. Miguel, thanks for coming back on the show. Actually, it's been a while.
Yep.
So I want to start off by asking you about silver. The last time we spoke, silver was firm, but we hadn't had this huge spike up, eventually hitting the highs that we saw back in 1980, around $50 an ounce, and a very sharp pullback. You know, you deal with a lot of commercial customers in your business. Characterize, that price run up, what happened, and what the market looks like right now.
All right, well, before the run up on the price, there was a lot of talk about big fundamental growth in silver, which is true. Because what happened in the solar panel industry, which is being funded by the governments worldwide, started to grow exponentially. Now, their consumption of silver and their demand is specifically for a kind of silver called 4-9 silver, which is the purest form of silver, without certain elements involved with it. And so there was a tightness in the beginning, so it created this demand, and people were ripping metal off the exchange. Now, the rest of the market started to perceive that as meaning that people are taking metal because, they want to hold it, and there's no metal left, and, the supply is not going to meet demand. What happened was that supply, of course, eventually did meet demand as the other metals and mining producers, refiners started delivering metal 4-9s for the demand. So that started meeting, but the silver market did go into backwardation, meaning the near month, because that's when you would take the metal off the exchange.
And that's a rare phenomenon.
Yes, that's a rare thing. It doesn't happen usually.
Yes.
So it went into backwardation where the near month was higher than the future month, and the consumption was going, and so everyone saw these fundamentals and thought they were strong enough to drive the market. We did have a lot of investment money coming in. The margins, meanwhile, didn't go up as fast as they should have. What happened then, when we reached really close to $50, we broke even the $50 a point in the futures market. Once they started raising margins, then all of a sudden a lot of the people that were in that market, in the leverage side of the market, started bailing. Some
of the weaker-handed speculators.
Right. So
and they raised the margins, I think, 3 or 4 times, didn't they?
Right, that's correct. In fact, it was like three days in a row they raised the margins. And the market just started
almost
tanking.
A 40% decline from the peak. Now, we've settled in here around $36, $37 an ounce. Market sort of quieted down, I would say now. Where do you think we resolve? I mean, do we start heading back up again, or maybe back down into the high 20s?
Well, Mike, as you know, you have many years' experience in this market. You know silver is very volatile.
One of the most, if not the most.
Right.
Exactly.
And so when people get burnt, they usually get scared. And I think right now the reason it's not following as strongly or rallying as much as gold has in the recent weeks is because people don't want to get burnt again. And the truth be told, the prices of both gold and silver are up on investment market demand, no other reason. Not fundamentals. There are strong fundamentals in consumptions of these products, but not enough to drive the prices higher. And of course, if QE3 comes in, then there would be more reasons for the metals to go higher.
Well, how long can that continue? I mean, in order for it to go up on pure investment stockpiling, I mean, you need a steady and uninterrupted flow of investment money into these precious metals. Wouldn't it reach a point where, okay, a pension fund or these ETFs or investors, in the aggregate say, okay, we hold enough right now?
Well, I think it's reached that point for a lot of them, and a lot of them just don't see the benefit. Remember, buying metals doesn't bring you an instant return. It's only a price move.
Right.
So you have expenses in holding those metals.
Right. So you don't have a dividend.
Right.
It's not paying you any interest, and it costs you to hold it.
To hold it. And that's why a lot of these firms are waiting on silver. They prefer gold. When silver had reached that area in the 40s, I had told a lot of people asked me, what do you think? I said, well, you know what? The real currency, like people like to call gold and silver currency, which I don't believe. I don't either. But I say, if you want to say which one has the capability of being a currency, it's gold. Try to carry, $500 worth of a metal in your pocket. Gold would be no problem. Silver is going to be a problem. So I said to the people, look, I would sell the silver and buy the gold. If they had taken that spread, they would have made a lot of money. Now, I don't believe in this relativity of finding the spread and trading that spread. I just, at that time, knew that silver was high compared to gold, or felt that at least. Not that I knew. If I knew it, I would have played it.
Okay, so now it seems like, as you said, probably a lot of people got burned. They're staying away. They're more cautious. We could enter, or maybe we're in a period of sort of flat, prices for a while. Gold remains bid fairly strongly, you think?
Yes, gold remains bid fairly strongly. As long as, look at the world. It's just an upheaval. There's problems everywhere. And people are going to just keep holding on to gold until these issues are resolved, especially with the euro and the U.S. economy. Last night, Australia came out with the poor jobs numbers, which also indicated a global weak economy, which is bad. China is believed to be tightening more, so if they tighten, there's going to be less demand, less consumption, less profit, less money. So where's that going to lead? And that's what people are waiting to see what's going to happen.
Isn't it? It's odd, though, because if you look at the performance of government bonds, like treasuries, for example, they've been doing very, very well. And yes, the interest rates are low. However, you're still getting paid something. So there's sort of this, face-off going on between, on the one hand, you see gold rising purportedly on the fear aspect, and on the other hand, you also see government bonds where there are a lot of people saying, oh, those are going to collapse, or it's a bubble there, yet they continue to go higher. So how do you sort of reconcile
Well,
that?
First off, obviously an investor has these investment funds especially have a lot of money to invest. And they're not going to, the currency markets are way more liquid than gold are. So they'll invest some in gold, but they're not going to put all their money into gold. They want to be somewhere liquid because gold could drop like a wet taco. So a currency everyone's going to always want. You know what I'm saying?
Yeah.
So the liquidity is an important factor in that, and especially when you're investing billions of dollars. You want to be somewhere that's liquid. That's another reason why silver is going to be a laggard, because that is an illiquid market comparatively to the others. If you compare palladium to silver, then silver appears to be a liquid market.
Right.
You know what I'm saying?
Yeah, and it explains the very high volatility of silver.
Exactly.
Let's talk a little bit about those other metals, platinum, palladium. Where do you see those going?
Well, what we've seen in the recent months is very strong fundamental demand, auto demand growing, and that's their principal consumption. There's jewelry demand also growing for platinum and palladium in the Asian markets. So we've seen growth there, and according to a report from Johnson Matthey, that palladium is expected to be in shortfall again this coming year. Now, when they prepare this report, they're doing it believing how much the investors are going to take. So that's where the shortfall is. But remember, there's always above ground stocks, which means the ETFs and people holding metal in their vaults. As long as all these things are being held, they could come in at any moment. So they could theoretically crush the price and the demand. But the demand is brisk. I think it will continue. I think fundamentally those markets are strong. But, of course, depending on all the other economic factors.
Which I want to ask you about, because now we're starting to see some very obvious weakness in the economic data, not just here in the United States, but in Europe. China, as you mentioned, stepping on the brakes, trying to cool down their growth over there. Equity markets, under pressure. What if we enter into another economic downturn, another recession?
Actually, I think a recession would drive the prices of those metals down.
It would,
if there's no quantitative easing.
That's historically been the relationship there.
If there's no quantitative easing, meanwhile, gold and silver would probably perform well.
If the Fed came out and said, okay, we're going to do QE3, do you just buy those metals all across the board very aggressively? Is that automatically going to trigger a lot of investment buying?
Well, yes, theoretically it should, because that means more money, the weakening of the currency, the value, and that's what metals do. An ounce of gold is an ounce of gold. It's not going to change. So theoretically, it should go up in value. So that same $1,550, depending on how much quantitative easing they do, could really, theoretically, $1,600 automatically by the calculation.
But they're not doing it.
Right, they're not doing it.
According to Bernanke's most recent comments, he kind of took that off the table.
Which is a good thing. I don't think we should do it.
I don't think we should do it either. But yet we haven't really seen much of a negative reaction in the precious metals.
Right, because they're going to hold at this level until the economy improves. That when the economy starts to improve and things get better, we have to suffer through some pain till we get there. And as things start improving, then people move their money out of there.
So even a deflationary scenario, in your view, would be bullish for gold?
In the short term. Doesn't matter. People are going to hold the gold until they see and are convinced that things are safe,
so
that
if
the waters
things,
are safe.
In other words, things get much better, unemployment starts to go down, GDP output really starts to improve, people feel safer, they feel more secure, they let go of these investments in precious metals.
Exactly.
All right. Well, you know, if you look, I don't see that happening because I just do not see the policy response anymore that would create the environment for a big economic upturn.
Well, I agree with you.
I mean, if
it's not going to happen in the short term.
I see the opposite.
I agree with you there.
Like all the austerity all over the place, and now we're imposing austerity on ourselves here. You know, it's already happening in Europe. We're doing it here. And so I just see sort of an outlook of more weak economic growth, stagnation perhaps.
I agree.
So that would, I guess, according to how you see it, keep the underlying demand there, right?
Yes, that's exactly, and I agree with you. I think we're going to see a lot of pain and suffering for the next few years. But once we come out of that pain and suffering, that's
if
I
right?
think we will. See, the one thing is, things are not it's not a straight line. There's other things going on. People are growing, babies are being born, there's demands for goods and services, and that creates the economy. So the economy, as people spend, they're going to need, and things will grow and things will change.
Yeah.
It will. There will always be change, and that's what we have to expect, that there will be change. And one of the greatest things of our economy in the United States, which I have strong faith in, is that we're a very creative economy. We create things. We invent things. We have new products. I mean, the Apple iPod, for instance, an iPad and all that stuff, the PC, the computers, all these things were ideas in people's minds, and we're going to come up with something new. The next new thing is still going to come out of here because we have the freedom to create.
The next version of the iPad, even though our roads and bridges are collapsing and we need major
but we need the iPad to make the money to fix everything else.
All right, there you go. A man who remains very optimistic on America, as I am as well. That's it for now, folks. I want to thank my guest, Miguel Perez-Santalla. This is Mike Norman. See you next time. Bye-bye.